Howdy folks, it's Dr. Jeff Camarda again with a word from Jeff, this one entitled Spring Stock Market's Outlook. Is it time to fasten your seatbelts? Now, as viewers have no doubt noticed, the stock markets around the world have staged major rallies since the December lows. Camarda thinks there are several reasons for that, all of which we've previously explored in these videos, but still, in this ever-changing world, it's helpful to keep a watchful eye on the navigation markers. So let's take another brief look at Camarda's perspective on the investment course ahead as the waves ease and the sun breaks. Now, interest rates, for one, have been a deeply feared, though in my view much overblown, stock market headwind for a year or so. The wind has shifted with the Fed's remarkable about face, going from restrictive to accommodative in record time, and transmuting a headwind-slog into an easy tailwind cruise. Other major central banks are following the Fed and switching feet from brake to throttle. Trump's efforts to reshape the Fed by nominating folks like Herman Cain may even throw gasoline on the free money fire. Mortgage rates plumb record lows anew, and those that miss them may want to scurry. Of course, low rates are good for stocks because they make non-investment alternatives look even more dismal, and because low rates are good for businesses by reducing expenses and giving consumers more loot to buy goods and services with. Recessionary fears, like the interest rate boogeymen, seem to have also been wildly overblown. The economic pulse in the U.S. and offshore the world clearly has quickened, and notably the Chinese economy seems to be on the verge of a new tear, especially notable as the Trumpian Sino-special economic squeeze continues unabated, and threats of a tightening vice on the Chinese, of course, have not been retracted, at least not yet, though that seems like it may be imminent now. The upbeat in world economic activity is indeed remarkable when one considers how sodden the wet blanket of the trade wars has been to the fires of commerce. Now, the bound genie of global growth roils and gnaws at the bottom, and the Fed's flip-flop interest rate deflation may just loose the cork into a great whoosh of economic expansion around the globe. And finally, while the great deal of China remains a tangled work in progress, happy faces seem la mode de moi, which I think means the fashion of the month, on both sides of the wrestling mat, with each corner grinning and echoing that a deal is close. So close. If this happens, and Camarda puts the odds at near certainty of a trade deal with China by summer at the latest, if only to grease the skids of Trump's two-term run, the collective economic genie will burn very bright, soaring on Technicolor afterburners for a long, long time, we think. It's hard to overstate how promising this trifecta outlook is for the world economies and, by extension, for stocks. The markets have bounced hard off the late 2018 bear market lows and have been lately threatening to make new highs, even before the recession all clear seemed recently to have rung. With fresh air in the collective market's wings, it seems the blue sky is now the limit. Camarda generally concurs with this assessment, though cautions the following proviso. By many measures, U.S. stocks remain quite pricey, even frothy, even with a booster rock or tailwind may be kindling. For a long, long time, we believe that U.S. stocks should be bought very carefully with a Scrooge-like flinty eye towards solid value, an approach Camarda's endeavored to double down on over the past year or so for its clients. Elsewhere in the world, stocks are generally much better values. Stock investors' allocation should be constructed or adjusted accordingly. Camarda clients' portfolios, again, of course, already reflect this strategy. And thank you so much for enduring that relatively long-winded and somewhat verbose market outlook. Hope you found it useful. Go ahead and pass it on to your friends. I think you could probably tweet it. I don't know how to tweet, but I bet you do. In any event, until next time, thank you so much for watching. This is Jeff Camarda.